Hello guys, today I am going to analyze 4 real estate companies. The first company is AMT, the second company is Welltower, the third is Crown Castle, and finally there's Mid-America apartment communities. I'll talk about their share price, their earnings, and then I'll discuss their respective financial statements. Let's begin this video by going through their respective Yahoo Finance data. The first company, American Tower Corporation, bet its second and third quarterly earning estimate. Unfortunately, it missed its fourth quarterly earning estimate last year. However, it has beaten its first quarterly earning this year. Unfortunately, the estimate for its second quarterly earning this year is lower than the second quarterly earning estimate last year. In terms of the share price, the company at the beginning of the pandemic was at 231 and it reached a peak of 292. The next company, Welltower, according to Yahoo Finance, Welltower missed its second quarterly earning estimate. It did beat its third quarterly earning. However, yet again, it missed its fourth quarterly earning and first quarterly earning this year. Luckily, the estimate for its second quarterly earning this year is greater than the estimate for its second quarterly earning last year. In terms of the share price, the company started at the beginning of the pandemic was at 84.91. And unfortunately, the company was not able to beat that value. Well, it did beat it by a small amount in March. However, we want to see a larger increase in the share price. The third company, Crown Castle International. Crown Castle bet its second quarterly earning. It bet its third and fourth quarterly earning last year. It bet its first quarterly earning this year, and as we can see from Yahoo Finance, the estimate for its second quarterly earning this year is much higher than the estimate for its second quarterly earning last year. In terms of the share price, the company at the beginning of the pandemic was at 149 and it reached a peak of 208. The last company I'll be talking today about, Mid-America Apartments, has beaten its second, its third, and it has beaten its fourth quarterly earning last year. It has beaten its first quarterly earning this year, and the estimate for its second quarterly earning this year is higher than the estimate for its second quarterly earning last year. In terms of the share price, the company at the beginning of the pandemic was at 137, and it reached a peak of 229. Now that we have discussed their respective share price and their respective earnings, let us now take a look at their financial statements. The first company I would like to analyze is AMT. AMT, American Tower Corporation, is an owner and developer of multi-tenant communications real estate with approximately 219,000 communication stations. Now, in terms of their financial statement, the company increased its revenue from $7,580,000,000 in 2020 to $9,356,000,000 in 2022. Similarly, their income rose from $1,916,000,000 in 2020 to $2,567,000,000 in 2022. This is an impressive increase in income, and hopefully the company will be able to continue this increase. Now, financial activity for AMT rose drastically during this time period, from $521 million to $16,424,000,000 in 2022. Now, this increase in financial activity mainly comes from the increase in current liabilities and in long-term liabilities. AMT has taken out a significant amount of loans. They increased long-term liabilities from $30 billion in 2020 to $51 billion in 2022. Similarly, current liabilities rose from $5 billion to $9 billion in 2022. AMT has taken out a large sum of loans, and this is a concern. Currently, the Federal Bank of Reserves is increasing its interest rates, and we as shareholders must ask ourselves, is AMT capable of paying back the loans? It will be certainly more difficult for them to do it as of now. In order to find out the answer to our question, we must wait until next year in order to observe their financial statement to see if the company increases its revenue using the loans they've taken out, to see whether investment activity, whether their current investment activity brings in profit for the company. While I'm talking about investment activity, let us talk about some of the acquisitions AMT has performed during this time period. The rise in long-term assets in AMT financial statement can be explained by their acquisitions. AMT has acquired companies which operate in South America and in Africa. Now, Africa is slowly developing and it could become profitable in the future. The same goes for South America. South America is being hampered by socialistic ideas, governments. However, South America is not in a conflict. There's no war in South America, and it's likely that some investment activity will go there. In any case, the company's financial statement is not very good. However, if their investment activities are successful, if the company becomes more profitable through their investment activity, and they manage to pay back their loans, then the company might become quite interesting. It is worth for us to wait to see what happens in the future years, and to value the company again in the future. In any case, that is all I have to say about AMT. Let us now move on to Welltower. Now, Welltower is a company which builds buildings for seniors and takes care of their healthcare. Now, because due to the increasingly larger older population, this business is becoming more profitable. Unfortunately, we cannot see this from Welltower's financial statement. Welltower experienced a fall in revenue from 5,121,000,000 in 2020 to 4,742,000,000 in 2022. More concerningly, Welltower experienced a significant decrease in income. Income fell from 1,330,000,000 in 2020 to 374,000,000 in 2022. The company needs to improve both figures by a very large margin. The next thing I'm concerned about is the current assets. Majority of Welltower's current assets are composed of accounts receivable. This is a concern to me because it reduces the company's stability and it increases the company's risk. I would like to see a reduction in accounts receivable and a reduction in current liabilities. The current assets current liability ratio is not good in this financial statement. Welltower needs to reduce their current liabilities. They need to reduce their accounts receivable, and they need to improve their income to equity ratio. Equity is too large for this company. I'd like to see a reduction in long-term assets. Welltower should sell their long-term assets, the long-term assets which no longer create revenue, and then use the cash from these sales in order to reduce their liabilities. In any case, that's all I have to say about Welltower. Their financial statement is not good. Let us now move on to Crown Castle. Crown Castles is a company which operates and leases cell towers and fiber supporting small cells. Now, the company managed to increase their revenue and their income during this time period. Revenue rose from $5,763,000,000 to $6,340,000,000 in 2022. Similarly, income rose from $860 million to $1,158 million. Two things I'm concerned about in their financial statement is their current assets and their current liabilities. A large portion of Crown Castle's current assets is composed of accounts receivable. Such large accounts receivable increases the company's risks and reduces their stability. I would like to see a reduction in accounts receivable and a further increase in current assets. The current assets, current liabilities ratio is not good. This is because of the recent increase in current liabilities. Current liabilities rose from $192 million to $2 billion in 2022. Now, such large increase in current liabilities is concerning due to the increase in interest rate. The increase in interest rate increases the company's risks and reduces their stability. Just like in the case of AMT, we must ask ourselves whether or not the company, Crown Castle, will manage to pay back the loans they bought without any issues. Again, in order to determine this, we have to look at their future financial statements. In any case, that is all I have to say about Crown Castles. Let us now move on to the final company. Now, the final company I will be looking at is Mid-America Apartment Company. Now, this company focuses on the development of residential apartments. And from their financial statement, we can see that the company experienced a small increase in revenue from $1,641,000,000 in 2020 to $1,778,000,000 in 2022. Similarly, their income rose from $366 million to $550 million in 2022. These are relatively small increases in revenue and in income, and hopefully the company MAA manages to increase these two values further in the future. The next thing I'd like to point out is the company's current liabilities. all of the company's current liabilities are made out of accounts payable. This is actually a good thing. It's great news for investors. Accounts payable is not a bad thing for a company. The next thing I'd like to point out is the company's equity. Equity in this case is much larger than the company's income. Usually this is a bad thing, but in this case it's different. It's expected that this company would have a lot of long-term assets due to the nature of their business. So we should expect equity to be larger than income for this company. That being said, I would still like to see an increase in income for this company. In any case, this company is very safe. They don't have any long-term liabilities, so they can easily take out a loan if they ever needed to do so. For example, if there were a financial crisis or the company would be going through a difficult time, they shouldn't have any problem in taking out a loan. In any case, this company is safe in a time of crisis, and it's worth having a look at. That is all I have to say about MAA. Let us now rate all of these companies. Now, I'm going to place American Tower in the careful section. The company has potential. However, I'd like to first see a larger increase in revenue and in income. I want to see whether or not the loans that they have taken out will pay off, whether or not the acquisitions will pay off. And for that reason I'm placing them in the careful section. They need to show a profit from their investments. Welltower is going to be placed in the trash section. Again, the company experienced a fall in revenue and in income. They have taken out a significant amount of current liabilities, even though interest rates rose. They need to increase their current assets, and I'd like to see a reduction in liabilities from the company. Crown Castle is going to be placed in the careful section. Here again, the company's current assets, current liabilities ratio is not good. Current liabilities significantly rose for the company, even though interest rates rose. I'd like to see a reduction in current liabilities, and I want to see an increase in revenue and in income. Finally, MAA is going to be placed in the OK section. The company doesn't have any liabilities which an investor should be concerned with. They are a very stable company and a very safe company during a time of crisis. I'm not placing them in the buy section because they did not experience a large increase in revenue nor in income. I would like to see the company. I want to see a larger increase in revenue and in income in the near future. If the company manages to increase their profitability, then I'll place them in the buy section. However, for now, I'm placing them in the OK section. In any case, that is all I have to say about these 4 companies. In the next video, I'll talk about Moët Hennessy, Nike, Tapestry, and this company. I forgot their name. In any case, hopefully you enjoyed this video. If you did, give it a like, subscribe, and see you in the next video.